61,000% in 5 years, rising over 600 times in the last 5 years. This company, once a penny stock, has become the largest wealth generator over the last few years. Hello and welcome to our channel 5 Minute Finance by ET Money, where we talk about the basics of personal finance. In this video, we'll look into the twisted tale of one of the most sought after stocks on stock exchanges. The financial services firm that turned to a renewable energy company, Waaree Renewable Technologies Limited. We'll also try to gauge the financial fitness and the red flags in the company, which will help you to assess it and make informed investment decisions. So let's first start with a brief background of the company. Waaree Renewable Technologies is a solar engineering, procurement and construction or EPC company operating under its parent company Waaree Energies Limited. So suppose you want to switch to renewable power but don't have the expertise in setting up a solar power plant. So you will go to a contractor who on your behalf will engineer, procure raw materials and set up the plant. This is where Waaree Renewables help out. But back in June 1999, Waaree Renewables was established as Sangam Advisors Private Limited to help small and medium-sized enterprises with their financial planning and fundraising activities. Fast forward to 2010 and things got interesting. Giza Estate Private Limited, a real estate development company, acquired 49.69% stake in Sangam Advisors, and the remaining stake was acquired by Bikaner Wooltex Private Limited, an apparel manufacturer. In 2012, the promoters of Sangam Advisors hit the stock market with an IPO, raising 5 crore rupees and got listed on the BSE SME platform. Here comes the twist in 2016. Waaree Energies, the renewable energy player, stepped in with a share purchase agreement, eyeing Sangam Advisors. They also made a public announcement for an open offer. In 2017, a major indication of a change in business activity was noted when Sangam Advisors secured a mega deal from Maharashtra State Power Generation Corporation Limited for designing, engineering and setting up a 150 megawatt solar power plant. With renewable energy on their minds, Sangam Advisors changed its name to Sangam Renewables Limited in 2018, and in 2019, Waaree Energies took over Sangam Renewables. And finally, in 2021, Sangam Renewables became Waaree Renewable Technologies Limited. So how dramatic that shift was. Now, once you know how Sangam Advisors became Waaree Renewables, let's dig into the financial position of this company, how it has performed. The financial analysis focuses on the period following the company's shift to renewable energy, that is from financial year 18. Waaree Renewable has recorded a big surge in both revenue and profitability metrics after the transition. Total income has increased from nearly 2 crores in financial year 18 to 876 crores in financial year 24, a jump of over 430 times in 7 years. Notably, the most significant growth was observed in the period between March 2021 and 2022. EPS, that is earnings per share of the company, also improved significantly. Now, EPS tells us how much earnings a company makes for one outstanding share. So higher the EPS, the better it is. In the last 2 financial years, Waaree has maintained an EBITDA margin in the range of 23 to 24%. Now, EBITDA is earnings before deducting interest, taxes, depreciation and amortization. Comparing it with peers like Adani Green and Lakh and Toubro's energy project division, their EBITDA margins are 92% and 9.1% respectively. Also, there is no debt in the books of the company, and the return on capital employed, which means how efficiently the company utilized the capital to generate profit, improved significantly over the last 5 years. The improvement in the financial position of the company reflected clearly in its share price. At the time of its IPO launch, Sangam Advisors offered shares to investors for mere 22 rupees per share. The stock, after listing on the BSE SME platform, mostly traded like a penny stock, that is below 10 rupees. Post 2021, after the company was renamed Waaree Renewables, the share price skyrocketed. Within a year, the stock price rose from 3 rupees to 60 rupees. And the same trend was witnessed every year post that. The stock price has become so volatile that if you see on most trading days, the stock gets locked either in the upper circuit or the lower circuit as soon as the market opens. So buying or selling this stock on exchanges is hard. This leads us to the most interesting and final leg of this video, where we'll discuss whether Waaree Renewables can maintain its upward trajectory. Now, Waaree Renewables has had an exciting journey from being an investment planning company for small and medium enterprises to a leading solar EPC player in India. In financial year 24, the company's sales have increased by 150% on a year-on-year basis to 876 crores on the back of strong order wins and project execution. At the end of 2023 financial year, the company had an unexecuted order book of over 865 megawatts, which has now increased to 2,365 megawatts at the end of financial year 24. And it continues to increase on the back of aggressive bidding. However, looking at valuations, Waaree Renewable stock is trading at an extremely high price to earnings multiple, which has kept the analysts and investors divided on its growth potential or whether it will be able to keep similar momentum. Now, PE ratio shows how much price you have to pay for 1 rupee earning from that stock. Most importantly, many analysts believe that such stocks are getting investors' attention because of the euphoria surrounding the renewable energy sector and favorable government policy. And this brings us to the end of this video. Hope you found this information useful. Please share it with your friends and colleagues. And if you intend to invest in renewable stocks, you should first understand the sector's dynamics and company's business model and its economics. Hope to see you soon with more insightful videos.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.